episode 6 here of Energy Bites. Rad Dad is in the house. John Calfan, got my co-host here, Bobby Nealon, and we've got Jeff Davies today as our guest.
Appreciate you having me.
Appreciate you coming. I'm excited to chat a little bit.
For sure.
Got I think there's lots of interesting kind of tidbits we can talk about today. So normally we just ask everybody to kind of introduce themselves. How, where are you from? How'd you kind of give us kind of some backstory on how you kind of got to this point?
Sure. Jeff Davies. I'll do this kind of as quick as possible. Grew up in New York, Syracuse, kind of New York area. So upstate. Undergrad, Binghamton.
I had to go Google where exactly. I know the name, but I was like, where actually is exactly that? And I was like, oh, that's nowhere near where I thought.
Yeah, I mean, that's the thing, right? If you say you're from New York, people think you're from the city.
Right. Yeah, absolutely. It's a much bigger state.
I grew up next to a farm, basically, right in the middle of nowhere. So kind of one stoplight town, basically. So end up down in Charlotte, worked for a bank for 10 years down in Charlotte, First Union that turns into Wachovia, then Wells Fargo. Loan syndications group, so doing big corporate loans for kind of all industries. Then I roll into a portfolio management group in 0304. So I'm an old dude. I start covering utilities in 03. Utilities back in those days had E&P arms, right? So I was covering utilities and energy really. And then 04, I get asked to cover energy. We were using credit default swaps to basically kind of manage our portfolio, lay off risk, add risk, diversify, basically roll that into a prop trading group. Again,
give me some context. Is that pre or post Enron? That's post Enron.
That's right around the time of Enron.
Okay.
Actually. Yeah. So this is the timing. Some great stories from back in those days. 1 year TXU CDS was trading at like 1,500 basis points, 15% for 1 year credit risk, right? Because the whole marketing thing blew up, right? So like it was, when I was learning CDS, it was cutting the teeth on like the very first few years of it. And it was right when the, energy marketing scandal hit basically. So like all sorts of utilities were blowing up right as I was learning utilities and right as I was learning credit too. And we learned credit and credit default swaps, the group I was in. So super interesting. After I prop desk, again, covering utilities, energy, tech, prop desk is doing convert arb. It's doing high yield, distressed, bank debt, et cetera, et cetera. So I have this like wide range of exposure to kind of investment products, and because you get the equity exposure in converts, right? So, and energy stuff. So then convert arb fund, I jumped to a convert arb fund in Minneapolis, 7 years up there, covering energy, utilities, tech. We were up in 08 when everybody else was down, right? So that was our claim to fame. We were up 12%. Most convert arbs were down 50%.
I was going to say everyone else was down.
Right. So, and it's kind of, super quick story. We were 400 million in assets, right? The convert arb fund, you can lever about 6 times. So you had like 2.4 billion in positions. We owned 350 million countrywide bonds going into 08 on 400 million of assets, right? So, and countrywide got bought by Bank of America. We owned them going into the year at like 65 cents on the dollar. They popped in like mid-January to 100 cents on the dollar. So we made basically like call it $120 million on 400 million in assets in a single day, made 25% in a single day, the day that was announced. And it was the luckiest trade ever because Bank of America wishes they never did that deal.
Yeah.
Right.
That's
it would have gone, we assumed recovery was 40%. All these assumptions, they were all wrong.
Yeah.
So it was luck. That's how life works. Right. So, but the thing was we were able to be aggressive coming out of that because we were up. I was doing a whole bunch of energy stuff. The way it worked there, I was doing analysts for the distress stuff, analyst for convert arb, and then I would trade my own high yield stuff, basically, right? So I got a name to be like a smart energy dude. I was doing a whole bunch of stuff over in Norway too for like rig markets, Plateau and Pareto are the brokers over there. So we were financing a whole bunch of rigs, offshore stuff coming out of the crisis. And then TPH reached out to me in like 2012. They were looking to, have a credit effort start up. So I actually commuted for about 18 months. TPH was going to co-brand a fund with another private equity group. Basically, that kind of falls apart as I joined the company. I'm working for Dan Pickering at the time, and if you know TPH, it's basically, or was, I should say, it was investment banking, equity sales, trading, research, and then asset management, right? So I'm in that group. Credit effort falls apart. Dan and I are able to raise some capital from some pensions, or a single pension, actually. We do co-investment for a year and a half. And then I was able to accumulate some money to basically launch a credit fund in early 15 with the view that credit was going to blow up. It did. The money I had was long short. We quickly kind of, did well in 15, 16. I basically, had a couple weeks where I lost 15%. Capital gets pulled. I ended up winding the fund down and left TPH. So that's kind of my story. Leads me to what we're going to discuss today, where I take kind of year and a half off. I then work for a software startup, call it a poor man's Bloomberg. I saw their, and that's kind of during COVID and whatnot, saw their super unfocused kind of efforts. And gosh, we were spending money like crazy. We had 12 devs in Kansas, probably needed 2 or 3 for the project. So learned some lessons there. When I left there, I ended up at midlife crisis, let's call it, right? Because I don't want to go back to asset management. Didn't want to live that daily mark-to-market life. It sucks.
Yeah.
And then, all right, let me take my energy expertise. And this leads me to basically about 12 months ago, start putting out Intersection. Okay. So Intersection is, hey, let me see if there's a market for poor man's WoodMac, let's call it. Let me put out energy insights around. Intersection is the intersection of traditional energy and new energy. And let me wrap, because, as I'm on Twitter, as I'm on kind of everywhere, it seems like there's so much bias in your view of what's happening in energy. So if you can just take data-driven insights, say, let's just forget about our opinions and let the data tell us what's happening.
Like traders do?
Right. Yeah. I think there's value in that product. So I wanted to see if there was kind of, folks that would enjoy that. So had success early, did a co-byline with Bloomberg, Wall Street Journal, New York Times, quoted and all that stuff, CNN, all that stuff. And really it was pretty rudimentary. I'll take a step back. When I launched that, I reached out to a guy that I met through Upwork in Croatia. He's in Zagreb. His name's Veli. And he and I said, I needed some D3JS visualizations, right? So I didn't know, okay, I'm going to get this data. How am I going to visualize it, right? And let's take a step back there. Why do you visualize data? For me, it's always been my entire career where I want to see charts and tables. It's easier to extract business insights.
It's how humans
just looking at a spreadsheet.
Yeah, it's how humans extract.
Here's a huge table.
Right. What's it mean? What's it saying? Right. So we all understand that, right? There's value in that, and that's ultimately where this conversation is going to lead. But I showed him, hey, here's what I need to do, and he said, don't pay me. Let's just figure out if we can turn this into a business. So at this point, we've been working together for a year. He's a friend at this point, right? So we do that for a year, and this leads me to then say, and I'm building a subscriber list, basically.
Yeah.
I haven't tried to monetize it to this point. Let's say January 1st this year, it's like, oh shit, I need to scale this thing. I need to turn this into a business. So I needed to do 2 things. What we were doing was pretty rudimentary. Had some scripts using Google Sheets, right? And I'm an Excel nerd, but there's some nice things about Google Sheets that you can you have Google runtime on their server, which is free, right? Embedded in their products. So we would basically just kind of write scripts to extract data from different APIs, energy APIs, query it, play with it, drag and drop it in, or, tie it to a D3JS if we were doing super interactive stuff. Or we started using Datawrapper as a off-the-shelf product, basically. And, stop there. Super huge fan of Datawrapper.
Yeah, tell us a little bit more, because I wasn't familiar until I started looking up.
Yeah, so Datawrapper is, let's just comp for Tableau, comp for Spotfire, comp for Excel, comp for Google Sheets, comp for really any data visualization platform. It's not considered, I think, in that same group, but I think it should be, quite frankly. Why is that? Probably because they have focused on the journalist niche, because it's actually the whole founding group is a whole group of journalists, New York Times, et cetera, et cetera. It's really the de facto platform for every news organization on the planet. But if you do look at, their customer list, they have Moody's, they have Fitch, they have Energy Aspects, they have United Nations, think tanks, et cetera, right? And their big thing is specifically really interactive, meaning if you hover over your chart, you can see the data, and it's reactive to screen size as well. So if you create a visualization, it kind of works everywhere.
Like natively reactive.
Native and super easy to use. Like their UI is super easy to use.
Yeah, because that's the thing, like D3JS is not, if you're just coming into it, like it's not friendly, but it is super powerful, so that they can abstract that for you.
And that's put it in the hands. It's a very common problem. I've run into a number of times where it's like, hey, we need a plot, but we also need to be able to share this plot. Sometimes we need to share it privately. Other times we don't care if we publish it. And then it's like, okay, well, if I'm using Power BI or Spotfire, then there's one way to do that. Well, now I've got to have a specific Power BI license to share it in the cloud and all of that fun stuff, versus something like this, which it sounds like is a much easier way to just go and
right. And I mean, just to give them, a kudos to, they have the best probably free plan on the face of the planet too, right? Yeah. So it's free forever. They've made a guarantee that your charts will never leave their servers or the web. They'll always be accessible. And that free plan, really all you get is kind of the created by Datawrapper attribution.
Yeah, I noticed when I was looking at pricing that there wasn't a ton of, at least on a smaller scale basis, need to even have to go to the paid plan.
Right.
That's cool.
So that was our, that's our tech stack, let's call it. And we needed to scale. And we're still at the point where it's like, hey, like every, I think, early stage startup should be, let's not spend a whole bunch of money and do databases until we know like there's people that are going to pay us for this product. Right. And I would advise everybody to do that. And that's probably the best thing having my partner with me, Belly, is he, sold a tech company over in Croatia, and he's got the tech scars, and he, I'm a dude, idea, and he keeps me in kind of these guardrails of like, let's do what we have to do, and let's let people that are going to pay us tell us what we're going to need to do, right? So I mean, that partnership has been great. But anyways, we need to scale ourselves. So we're pulling data from all over the place, and basically this project that I'll talk about, Wrapify, started as really intersection. So I kind of got two things that are pre-revenue that going down these paths. I think Wrapify is the more interesting of the scale, quite frankly, but it started as intersection, right? And I think this is, as I've dug into things recently too, this is the story of a lot of startups where we were trying to solve our own pain points. Yeah. Right. I needed to extract data at scale, and I needed to turn it into content at scale. Okay. Because I didn't want these like pieces that I'm putting out in an intersection or take me 3 or 4 hours, and I want to turn that in 15 minutes, right? 20 minutes. So I can, put this out and then do consulting and do more kind of build a data product. So, again, doing it as an MVP prototype, we've built this data API aggregator inside of Google Sheets, where let's just call it a custom sidebar. I can, access EIA data, DOE data, National Renewable Energy Laboratory data, all the European data sets, NOAA weather data, all in one place, access the endpoint, tell Google when to update that for me, put it on a timer, that data comes into a sheet, right? So and the beauty of Google Sheets is it's kind of a poor man's database. Let's just call it.
Absolutely. That's always my go-to.
So so how are you calling it? What are you using to call those APIs from
Google App Script? Okay. So Google has its own
incredibly
language that a lot of people don't know about.
Yeah. Right? I want to highlight that.
Incredibly underutilized tool.
Yeah, it really is. And it's built for workflows. That's at the end of the day, what it's built for, to make their products better.
Sure.
Right. So it's a simple, URL API call, right? Mm-hmm. And, again, I have my two partners that are doing most of the coding. I won't sit here and try to imply I'm doing it. I am dangerous enough to throw app script together and say, go to this API. And I mean, but that's actually part of the reason I went down this path, because basically like 1st of July, EIA was changing their API.
Different version there.
Right. So I was like, oh shit, their new version
Hooray.
sucks.
Yeah.
Maybe I should build my own. And then it was like, gosh, what we've built, we might be able to like, monetize. And then, one time I wanted to put a piece out on European gas storage, and procrastinating like I always do. I was like waiting till Sunday night, late at night. And I was like, I'll just be able to tie into the API, pull the data, do these Datawrapper charts. It'll be an hour. Couldn't figure it out, right? So I had to copy paste. Took me like 3 hours, and light bulb goes off. Like there's got to be a lot of people that, so I actually think that data aggregator API thing is a super interesting business. We probably will aggregate it with what I'll describe here as Wrapify. But so we have data coming into Sheets now at scale, and literally like this product that we have that is really just what we're using right now. Think of if you got a $6 or $12 a month Google business account, in a matter of a month, once you just kind of link it to a whole bunch of data sets, you could have every major global energy data set downloading itself onto your Google Drive, for like $10 a month
with
like 10,000 or 20,000 data sets.
Right. Without having to spin up a single server or write microservices or anything like that. Yeah.
Exactly.
Yeah. And I mean, and what are some of the limits of Google Sheets versus Excel? I mean, even like how many rows can you put in a Google Sheet?
I believe it's 5 million cells is ultimately
okay, 5 million.
Limit. Yeah. Right.
And so that's what you use. So if you have tall and skinny, you could actually go past the Excel limit.
Okay. Yeah. So I mean, does it work for every use case? Probably not. Right.
Yeah.
But like we all know this. There's still this massive community of people that use spreadsheets. Right. I mean, I've seen these charts where it's, hey, what's the most common programming language? Let's call it. Right. And like Python might be, a fraction of what Google Sheets and Excel are. Right. Yeah. It's just, there's so many people that use spreadsheets still.
Yeah.
And I'm a big believer of like, hey, listen, we're trying to focus on the data analysts, right? You got data analysts, data scientists. Data scientists I view as coders, and they're machine learning, AI. That's where everything's going.
They understand databases.
But I think a lot of ideas that end up in the data scientist level start at the data analyst level.
Oh yeah.
Where you have a smaller project and a smaller idea, and you spin up a spreadsheet full of data.
Yeah.
And you say, hey, this is interesting. We need to do more with it. Right. So, and if you can increase the velocity of those ideas that happen at the spreadsheet level, it benefits you at the data scientist level.
Oh yeah. No, I mean, I think the workflow you're talking about is one that we have a lot of success with, even like at GME, where it's, pulling in from the database, but into a spreadsheet for, like, say, for the accounting folks, like into their pivot tables where they're, they're comfortable there. I mean, doing it in a programmatic way. So, I mean, like, I think getting data into spreadsheets programmatically is more important, like, because what you're trying to do is to do it at scale where it's repeatable. Like, I think that's been the big knock on spreadsheets, is always that it's just always this manual work. And, Jeff has this crazy, spreadsheet that he knows how to use.
He coded
but I mean, if you're making reproducible workflows with them, I mean, they're super powerful.
Yeah. So, and the data is only valuable if it's in front of the person who knows how to use it and wants to use it. Right. Like I feel like that's a big struggle across the industry, just regardless of what, sub niche you're in, whether it's accounting or engineering, right? It's like, hey, I can understand the data if I have it.
Yeah.
But if I have to go set up a bunch of databases and, spin up a Python script to run a server that goes and queries it then we start getting a little hairier, right? Like I'd rather use, I'm not even, I don't want to say it. I'd rather use a Zapier-esque tool to just get it into a Google Sheet once a day and go play off of the Google Sheet. And what is Google's Looker, right? Like it's super straightforward. I can build an infinite number of dashboards and publish them for free. Just it's very handy.
Yeah, right. But I think it's worth noting too, though, because I mean, you said, I mean, it doesn't have to be one or the other too for people, right? I mean, because like can you go bi-directionally? You can move Google Sheets into BigQuery, right? But can't you go the other way? You can pull into Google Sheets from BigQuery also.
Correct. Right.
Yeah, people sleep on the Google stack, I think, a lot. But as someone who has been using it for the last couple of years, there's a lot of like hidden like the what is the
The
coding
query
language?
function inside Google Sheets is more powerful
Yeah.
than VLOOKUP or HLOOKUP
Yep.
or
Yeah.
index offset. I mean, it's the best
Well-
formula in a spreadsheet that I've ever. I'm a 30-year spreadsheet.
Yeah.
Yeah,
Right.
even but like the coding language, what is it?
AppScript. Yeah.
Right. Like I've used that in the past for one of my companies that one of the startups I work for contracts, right? Like we had our contract. I created a template of the contract in Google Doc. I then created a form that me as the sales guy filled out. And every time I filled out that form, it would go dump those fields directly into that contract. And now I have a contract that I don't have to manually go through and mess with. I don't have to go pay for a service to do it. And it completely automated. It's like,
it just works.
Yeah, right. And it's relatively straight. Like you can find a write-up with the code and everything on the internet very easily.
Yeah.
So we're at the point, okay, get back in the story. We're at the point where we're ingesting data at scale. Gosh, how are we now going to create kind of charts at scale? And we have data coming in on triggers and whatnot. How do we time charts on triggers, right? So hadn't used the Datawrapper API prior to this. At this point, Veli and I, my partner in Zagreb, and I are kind of working on the data side of things. And I actually reached out to, funny, I mean, kind of just the way life works. I'm like, what can we do in kind of Google App Script, and who's doing cool add-ons? It's like where my mind's going. So I start watching all these like YouTube videos, and I find this guy in Shenzhen, China. His name's Ashton Fei, and he's got a YouTube channel on basically workflow automations using Google App Script, and he's doing some of the coolest design I've seen ever, quite frankly, ever on any add-on. So I basically like watch 40 hours of his stuff, just watching his. I'm like, I got to get in touch with this dude, track him down, and ask him to start like, hey, what can you do for me with Datawrapper with all this data that I'm pulling in? And like, we didn't know what we could do with the API at the time, and there was really no template to look at, quite frankly. And for the first month, it was basically like, hey man, just go sandbox and figure out like what we can do, like play around and doing this and doing that. And it's really starts out like, how can I create charts from my spreadsheet to Datawrapper's API? And then I have this like centralized library. And really the early start is like, well, I'm just going to use those embed codes back at my website as reactive iframes and do what I've been doing. Right. And it's just a crazy story, quite frankly, where, I was like, well, it'd be really cool on Twitter to like maybe take some of these like visualizations that I'm doing and stitch them together in a GIF so I can put it out. Like people might click on that more. Right. So it's like talk to Ashton. He's like, oh yeah, we can do that. But like the process is you have to create a Google slide deck. Okay. And then the Google slide deck gets turned into the GIF. Right. So he shows me like, let's do this. Boom. We figured it out.
Also doable with app sheets.
And then the light bulb goes off. It's like, well, wait a second. We're automating slide decks here. Yeah. Right. So we can place content into slide decks. And, kind of right around that time, I had sent a tweet out. Hey, I kind of figured out how to automate slide decks. If anybody's interested, I'd love to kind of chat with you. And, person reaches out to me and says, hey, Jeff, have you ever heard of ThinkCell before? Right. Okay. So this is kind of like first week of February of this year. Right. And it's, hey, I look into ThinkCell. What's ThinkCell do? All they do is make 30 charts for PowerPoint, and they kind of automate it and kind of automate the data, but not in a very good way, quite frankly. Their market is consultants, investment bankers, right? People that get paid a lot of money to make slide decks. Okay. And they do certain charts that you just can't do in Excel and Google Sheets too, right? So ends up that company sold for $1.2 billion in 2001, right? 1 million users kind of paying $30 a month, right? So then the light bulb goes off of like, gosh, our product is pretty much as cool as that. We keep developing it. We keep developing the Sheets piece. We keep developing the slides piece. And, make a long story short, myself, Veli Gasparovich in Zagreb and Ashton Fei in Shenzhen came together as 3 co-founders. We've created a company called Wrapify. Wrapify is industry agnostic. We think it works for really any industry. But what is it? It's a means to, if you can get data in a spreadsheet, and that can be static data that you punch in or programmatically, you can get data in a spreadsheet. We can handle the whole process of taking that data, updating charts, helping you create charts at a 50 to 95% time savings.
I was going to say, so let's unpack that for a minute too, because that's part of a benefit or feature that I think is interesting. Is it's not just, okay, here's, the typical, okay, here's my source data, here's my X, here's my Y, and then I want this. I know that I want this, so I'm going to go do that. You also provide basically the ability for it to extract its own or additional insights. Is that not insights, but the different types of plots, I guess, is a better way. Or is that?
I mean, the current version, the users are really customizing the version of the chart. I mean, again, there's AI things that we can do down the path and things we've thought about, but the current version, it's an automation effort, not an AI effort currently, right? So it is, and quite frankly, I mean, just stop on that. I don't really see, just, and I'm going to be wrong on this, of course, right? But I don't see an AI solution that is there, quite frankly, for data viz. You're going to prompt and prompt and prompt and prompt and prompt before we could do it in half the time for you, automating it, right? And I don't see people saying, hey, AI, go crazy into my data sets and, extract what you want. It is a good option for hey, if I want to get a start for a deck and here's my topic and I want some text and some images.
Yeah.
But I don't know about the data viz side, right? And if we're at the point where nobody's doing data visualizations because AI is doing everything, I think we all just need guns and cabins. Because I mean, but that stuff scares me for sure. I'm sure we can talk about that. But anyway, so we're, all right, Ashton, go crazy, figure out what we can do. We've built this, really, I think, amazing product. To me, it's revolutionary, not evolutionary, where you can create kind of charts from Google Sheets. Those are basically, saved in the cloud. And then that cloud library we provide is basically a centralized library or a team library. Think of it as a sidebar, scrollable with thumbnail images. I can basically drag and drop that stuff into slides currently. That will probably expand into docs and emails and those types of things. But it's, just think about the current process of how this stuff works, where every Excel spreadsheet, every PowerPoint deck is a silo. And what I mean by that is you might be down the hallway and working on a PowerPoint deck and have created a really cool slide in there or did a chart inside of your spreadsheet. I have no idea that you did that.
Yeah.
Right. Whereas our setup, you'll be able to see what your team's working on and hey, let's put this into an investment banking kind of context. Probably every pitch deck, every strategy, analysis includes an oil price chart, and that is just being recreated and recreated and recreated. You create that once, you tie it to an auto updating data set, and that chart is ready once a day, and just everybody has access to it.
Well, it's not even the chart either; it's also the data set too, right? I think that's again, you've got so many different people in a organization that want to use a data set, but they're when Bobby and I worked together, I would use oil price. Excuse me. Oil price was a leading indicator by a quarter of revenue for our company. It was the clearest correlation of any of the data that we had. And it's okay, so I can put that in every single revenue chart that we have, because I would pull in, past and then futures, and that helps, right?
Sure.
But having to do that manually every single time was such a huge pain.
And to know that every's using the same data set.
Right.
At the same
That's
time,
very,
right?
very true.
You're using Brent, you're using futures, you're using prompt, right? So it's hey, here's our one source of data that feeds one chart that everybody uses in the same presentation or report.
Yeah.
So, at the end of the day, it's just workflow efficiencies. Once you set this type of stuff up, again, a slide deck can be turned 11 by 8.5 into a 1-page report, right? It can be a 2-page report, 3-page report. We can do the same thing in docs, where it's, hey, if you just kind of set it up once, a slide deck, a report, And we have this dynamic text function too. So imagine inside of a sheet, hey, I have data coming in that I'm feeding into charts, but in a cell, I want to write a formula that tells me what's my year over year change. And we can and concatenate it with text in that formula. I can then pull that text into your slide as your header, let's say, referencing your chart. So now you have text that automates itself and says, hey, here's what's happening on the chart. Automate the entire process so that when you're sleeping at 5 a.m., all that stuff updates, and then it sends it to your boss at 6 a.m. while you're in the shower, type of thing, right? So it's a complete workflow automation. And why does this work for everybody? Because, we like to say like every company is a potential customer, right? Because everybody's got an IR function. Everybody has internal and external reporting needs. Everybody has, kind of FP&A, right? Everybody has there's sales motions here, right? Let me take my customer data and have more contacts with them, and I automate the entire process. So we think it's, applicable to everybody. And, I would stop there too, right? This is an energy tech podcast. When I think of energy tech, you have CapEx and OpEx, right? Yeah. So CapEx, that's going to be very specific to energy technologies and how we drill. And there's amazing things happening there. Well, when you think about the OpEx side, I don't know that there's really any difference between energy companies and everybody else, right? Like it's how do I take signals from my business, IoT or sales signals, or how do I crystallize those into insights? Yeah. How do I manage my accounting process, my receivables process, my operations? All that is the same tech. We just do it differently, basically. Same functions, I should say.
100%.
It's kind of one of the reasons we started this podcast is that there are these so many kind of overlapping pieces, right? And it's like, does an accountant know, how the data got there? Probably not. Do they need to? Probably not. But it's still the same data, right? Like data is driving all of these departments. And so regardless of if you're a dev like Bobby or if you're on the BD kind of sales side like me, the data is required across all of them. And so there's a lot of different interesting tools that we've kind of found just through natural conversations that are like, oh, well, that you're using that for databases for updating, IoT and Snowflake and all this other stuff. Well, that same tool also helps me out because they have all these social plugins that I can pull data from all of our social channels. So it's just an interesting realm because there's so much overlap, but there's also still so little clarity on like what tools are unless you're deep in your own niche, right?
Right. And the story I just told is one of a pretty darn quick story, right? Yeah. Like basically February 1st to today. I mean, we're frustrated that we're not on Google Workspace, and we're hoping we're like monetizing this product by July 1st, let's call it, right? Yeah. It'll be kind of a $20 to $30 a month product, volume discounts. If you do need to white label Datawrapper, that there's a cost to that, but it's free to like in our thing there'll be parts of ours that'll be free forever too, is because there's this massive top of funnel, which these are the things that have gone off in our head over the last few months, right? There's this massive top of funnel of 1 billion Google Sheets users. Right. And I'll just be honest with you, we've out-engineered Google from how you create a chart, right? Like their process is 50 to 90% longer. It's not easy to do. The product doesn't look better.
Absolutely.
Yeah, because I think that's one thing, talked a little bit, but when you actually go to the Datawrapper website, you see charts that you see like, and they're beautiful charts. Like, it's like, it is what you see because it's used in the New York Times or Financial Times and stuff like that. They're really high quality visualizations. Yeah. So it's not, you would have to put a lot of effort, whether it was, you're fine.
About that.
No, you would have to put a lot of effort into your, it's probably not even possible to do some of the stuff with a Google, charting. Even Excel
some of the
charting.
Maps that they provide, some of the charts just aren't able to be done, right?
Now, but like because they're interactive, right? And like, then your Google Sheets are interactive. Like when you can hover on those visualizations in the sheet, or is it static?
Our focus is more on dropping images into, right? So like if you do a slide deck, it's going to be
static.
Yeah, it's going to be static.
Okay.
Right. So I think at some point we can get down that path where it is interactive, but our current focus is just like, hey, I need a report sent to my boss, right?
This is a snapshot.
Yeah, this is a snapshot of time.
Well, and like to your point, and then at least coming from my background, right? Like daily rig reports, daily drilling report. Like there's so many reports in the oil field that go out on a scheduled basis or recurring basis, and it's like you could literally automate the entire thing with what you're talking about,
right,
very easily with next to no additional cost.
For sure. I mean, just imagine Friday at 4 p.m. you owe your boss a sales report, a KPI report. You owe them a kind of production report. If you can get that in a spreadsheet, you set it up once, and literally, I think it's like less than an hour time to set this thing up. Where it's like, let me make a table, a chart, and maybe a map, and let me then automate that stuff, turn it into a 1-pager, 2-pager, send it to my email distribution list.
Yep.
It's done. It's on a schedule, whatever time I want. Now I never have to touch that again. So when you start thinking about like that process, like what you can compound over time, right? Like just imagine me as a content creator. This applies to digital wildcatters, where it's like, hey, let me extract EI data. Now let me do this solar monthly report with like all the solar data that comes out monthly. Once I set that up once, it's done.
Right.
Now let me do a wind monthly. Now let me do a semi-annual piece on geothermal. Let me do a nat gas piece, and power plant data, and production data, generation data. After 3 or 4, 5, 6 of those pieces, now I got a real business, right? Like, and I don't do any work,
Well, throw some Chat GPT on there, and
right.
You got a newsletter.
Yeah, exactly.
ready to go.
Exactly, because you can imagine inside of Google Sheets, hey, Chat GPT, take a look at this data set and tell me what's happening. Put that in a cell, and then we have the software to extract that text right into your report, right?
Yeah, if you're not using the Chat GPT Google Sheets plugin, go download it.
I apologize. I'm getting some Slack messages here from my dev
it's
team.
okay.
So
we both know
I would say too, real quick, like, I mean, this sounds, like I said, I was going back to, this sounds like a project that came together real quick, but this is the project or the product of a dude that has been in spreadsheets for 30 years, right? Like some kid out of college hasn't lived the pain points I have, right?
Yeah.
Like my experience of having been at TPH and banks and seeing all these young kids and myself back in those days, being there at 3 a.m. doing slide decks, right?
Yeah.
Because that's their life, right? If you think about the average consulting analyst, average investment banking analyst, let's talk about what their life is. They go for 2 years and basically be slaves, right? They work 100 hours, 80 to 100 hours a week. And 33% of their life is Excel. 33% of their life is PowerPoint. 33% of their life is other, basically, right? And they go make a couple $100,000, and then they go get their MBA and become bigger and better things, right? But like they are grunt people, right? And if you can save that person just, a couple hours a week, few hours a week, get $20, $25 a month, we think there's a huge market for that. And then you add on pretty much every company that, again, hey, I need this internal report sent once a week. I need this other report sent once a month, like to automate that process for people. We think there's a big, or
even, even for those types of companies, I need to publish this blog newsletter on a monthly, quarterly, annual basis to our investors, right? And so you've got both the private side where it's not interactive and it's in a Docker sheet versus also being able to publish it publicly, which is really fascinating. Oh, you're good, man.
No, it's all good. No, it's definitely a force multiplier. So I was going to ask, because you said you've been in spreadsheets for about 30 years. Was it always Excel at that point, or
always Excel?
You never touched the Lotus 1, 2, 3 or anything?
Never Lotus. Okay. I'm not that old.
Okay,
it's Chuck's age.
Yeah, it's Chuck. Yeah.
I mean, let's go back there. So, I've always been a guy that has been on very small. And why am I adept at this? Because I've always been on small teams my entire career. So this is just kind of a luck, maybe, let's call it. Like, and I always had to do a bunch of stuff by myself. Like the hedge fund that I worked at, there was like 5 of us managing 400 million. We were all analyzing 8 industries, right? Or sub industries. So, hey, how do I know all this stuff? I got to pull data, right? Like, and automate some of my processes. And I'll go back to when I was at First Union. This is back in 03, 04. even back in those days, Bloomberg, you could still use Excel and write the Bloomberg formulas to tie into their API. And so back in 0304, I had built a like 6-page, here's the weekly commodity data. And back then nobody was doing this type of stuff, right? So, and I wasn't on the oil trading group team, but I shared it to them, and that became a product that they sent out to their entire kind of client base every week, right? Back in those days, again, there's a product called SNL Energy that S&P ended up buying. They basically built a business around FERC Form 1 data, right? Which is just like, crazy, tough to get through. And, used to be, you had to dig for it. It's actually now available via an API, right? But back in those days, you couldn't access that stuff. So, same thing, you could build rate in Excel, tie into their API. So you could basically, for any utility, they did utilities and banks, structure a model where you would just say, hey, change the ticker, or they would do the non-public, kind of operating companies too, change the name. And I have a full 10-year projection going on and what their fuel mix looks like and what their cost, So I've always been a guy that was always trying to automate my processes.
Smarter, not harder. And
yeah, exactly.
So I was wanting to ask, like, obviously I've seen you even talk about it on Twitter, you're a big spreadsheet guy. What would you say is probably your magnum opus? Was there ever a certain spreadsheet that you were just really proud of? Or
probably the one that, I did with the other folks there on Twitter for the Whiting short piece.
Okay.
That was probably the most complex, model that I've ever done.
Okay.
Right. So it was, it's still available. Certainly happy to share it with anybody, but it was, pretty darn good, I think.
Yeah.
But right now, certainly Wrapify is.
Yeah,
right?
of course.
Like it is, I think it's, like I said, I think it's revolutionary, not evolutionary. It's going to be when again, and we all fall in love with our own products and our kids and all that shit, right? Like, but when I play with this, it immediately, I think to me is like, how could I ever go back to doing it?
Yeah.
It's one of those things where, and it's, and I'll give again, my co-founders, Ashton and Belly, huge kudos. Like I said, I'm a guy with a whole bunch of ideas, and what they say is, Jeff, like, we want people to use this. If it's too confusing, they're not going to use it. Right.
Yeah.
So like, we need to limit it to like what is really needed.
Yeah. Focus on the UX.
Yeah. And it has to be simple, right? Because if it's not simple and not easy, people aren't going to use it. Right. Yeah. So they've done just an amazing job where it's like, you just kind of, anybody, any dummy can just, basically all you need is your Datawrapper kind of access code, plug it in, download it from the Google Workspace store, and you're off to the races, right? And it's like, hey, let me create a chart in Google Sheets, and then, go open my Google Slides version of the same add-on, and there that chart is, and I can drop into a new slide, so it's all integrated across their products too. It's super, super nice.
I wanted to ask, walk me through just like the modeling process from the kind of finance investment side for energy, right? Because I took when I was getting my master's, I took a commodities trading class, and we had to trade gasoline and crude and nat gas once a week, and through that class they teach you about the heating days and the cooling days, and how important a lot of those like metrics are in kind of analysis and trading and stuff. But I'm just curious, just out of personal interest, honestly, what all finance and equity guys are looking at from a market data perspective. Obviously there's plenty of proprietary stuff and everybody's own pieces, but like, what kind of data are people normally pulling? Obviously,
to each his own, of course, right? Yeah. Like if you're investing, you better be looking at company data, so SEC data, and what, the end of the day, what drives energy companies is a macro view. That's always been what interested me about energy. It seems like you have to have a macro view to understand the micro, right? You can kind of work bottoms up, or you can work top down. Yeah. You probably end up at a similar place, but I think you need the ability to do both, quite frankly.
Yeah, sure. Right? Well, yeah. And that's because I'm a mechanical engineer by education, and I didn't know anything about the energy industry until I really started fracking, honestly, which is crazy. But, it's one of those things that I don't feel like enough people know or understand or appreciate, is like going out and building a pipeline or buying, a $100 million, $1 billion asset, those are like multi-decade timelines, time horizons that the finances are all modeled over, right? It's not we're going to go be profitable after 2 years after we spend $100 million. It's 5, 10, 20, 30 plus year, projections and timelines for the business to actually begin being profitable.
I mean, investment has whole different spectrums, right? There's traders, there's investors, there's long-term, there's short-term. Again, I've kind of always been in the daily mark-to-market life where it's like, you got to make money this month. And, and that's different than private equity money where you have, kind of long-term locked up money. Your money's not locked up when you're in short-term.
Right.
Trades. Right. So you have to be good every month. So everybody's strategies are going to be different, right? At the end of the day, going back to your question about the best kind of spreadsheet, one of them might have been when I was at TPH where, and I'll give him credit, Eitan Bernstein, who was working with me at the time, built just an amazing spreadsheet where we had the best model in the world, in my opinion, of, we were ingesting Bloomberg bond prices as like, the whole bond market's imploding. And we had built basically kind of a 1-page, let's just call it PV10, our version of a PV10, the way to blow down the PDP and value the PUDs. And we can kind of link the whole thing with Bloomberg and say, well, this is our value, and waterfall the value of the company basically through the cap structure too. So that each, whether it was unsecured or secured, we had a value every single day and it was tied to commodity prices too, right? So it was dynamic. Every single day, we knew exactly what each one of those bonds should have been worth, right? And, again, getting back to our kind of discussion here, like shit was moving so fast back in those days. Do I have time to go my IT team and say, hey, let's build this super cool AI ML model that, is going to tell me all this data and we need to ingest it and put it in a database. And by the time that happens, that trade's gone.
It's too late.
Yeah. So you do it in a spreadsheet, right?
Yeah.
That's just the way life works in a lot of situations, and I don't think that ever changes, quite frankly.
Yeah.
No.
What is, it's, what's one source that you feel like is a very useful one that a lot of people don't really look at, right? Like I said, you get the heating days, you get the cooling days, you get futures, you got all these like market standards.
I mean, my again, kind of our shtick has been to find unique data sets, right? So, and part of what we've done on the data aggregation side is say, hey, I can tie into all these open APIs, but there's also all this data that lives in CSV and Excel files all over the place that we can then turn into APIs, basically.
Yeah.
Right. So, I mean, I've put some recent stuff out around, and if you guys follow my Twitter and anybody listens to me, I try to be like a myth buster, and I'm certainly viewed as, for some reason, politically aligned with busting some of these myths. But like, for example, the Department of Interior has a great data set on oil and gas production on federal leases. That is not available via any API, right? So nobody plays with it. It's not on Bloomberg. I've never seen anybody use it, quite frankly, right? And so those are the types of data sets that I find interesting, where it's like, hey, let me show you actually what is happening in that kind of oil and gas, federal lease story. Yeah. And the reality is, it's a Leah and Eddy County, New Mexico story completely.
Yeah.
Right? And unless we can accelerate there, nothing's going to happen to accelerate production, right? And just did some things on gas flaring on federal leases, and so my shtick is to find kind of off the run data sets that people don't play with typically, and say, hey, here's some insights from them.
Yeah, these questions come from watching Billions and all the different stock or trading shows and stuff, where it's like, oh yeah, my guy's got satellite imagery of the plant and they say they're done and it's not done, and I short the shit out of it's.
I just had this conversation with somebody who was on Twitter, but a DM guy I've been DMing with, and I'm convinced nobody knows anything. Like I've been around long enough
right there.
You can maybe convince yourself something with data and whatnot, but like, I've been around energy for now 25 years. Every management team, they're always structurally bullish, right? And they're typically always wrong. I mean, they'll be right. Even a broken clock's right, half the time, right? But I've made huge mistakes. Some of the most respected people have made huge mistakes. Like I said, the complex thing about energy is you need a macro view. This isn't just like, hey, I'm selling iPhones and I got this secular kind of thing and I just need more penetration and boom, the math works. Right.
I need
like
money
global,
because I have a supply issue,
supply, demand, and geopolitics and, kind
it
of
is such a dynamic
local, refining dynamics.
And what you just had the Russian something or other blow up.
I mean, listen, like I thought we were out of the woods on nat gas, and here we are at $2 again, right? I mean, I don't think any of us in the industry, any industry experts, would have said, 12 months ago when we're sitting at $8, that we're going right back to the shit.
Well, it was like, all right, well, Freeport went down, but when that comes back on, it'll go back up.
Yeah,
here we are.
None of us know anything.
Yeah. Well, and even the macro view is so important, but it's also just fascinating how no matter what your personal thoughts are on what the market is, or I guess people's definitions of macro are also very different, right? But I don't think our 2 to 3 year outlook is at current prices is realistic. We just dropped below 70 yesterday, right? And it's how the hell are we sitting at that with demand still up? I know projection, of course it's all based off, projections and scary news things, but it's
I mean, what I can say is the market in commodity land sells first, ask questions later. Right. And obviously there is a fear over global recession, but to me that's kind of, again, when I pulled in this morning, Apple was pretty much at all-time highs.
Yeah, nothing's supporting it. Seemingly.
So, and it's such a big company, it's pulling the market up, and it's like the Fed's. I mean, listen, the Fed wants a recession, and they want people to lose jobs, and they want the economy to roll over a little bit.
Balance some of that cash back out.
So, if they keep raising rates, it's ultimately going to happen, and that's not good for. And we're having a banking crisis that none of us could have ever imagined, because they're getting wiped out by holding treasuries, right? They're holding risk-free assets and getting wiped out. It's a crazy duration thing. So, the market's selling first, asking questions later. But it's one of the most interesting times in my 20, 30 years of covering the space, just because of, I think market's also saying, well, is this EV stuff real? Is this renewable stuff real? I'm a big believer that there's going to be over promise and under deliver, but I actually do think it's real. Frankly,
Well, I mean, as a mechanical engineer, an electric vehicle is actually way better efficiently. From an efficiency perspective.
As an Audi owner, I can confirm that, given my cost to get repairs for sure.
Oh yeah.
Right.
No.
But no, it's just wild, because I completely agree with you. The minute you think you know something, it does the exact opposite of what you think it's going to do. I also think it's crazy because, I saw a chart the other day, and it was the Dow with oil price, just line chart, and it was back, I think it was probably 2005, right? A couple years before the major recession. I think they might have had bonds or inflation on there too, but it was everything went up super high. Everything crashes, including oil. And then guess what? We start to recover, and oil pops right back up to $100 a barrel. And generally feel like that's probably what's we've already had this kind of lack of investment on the CapEx side for a while in new discoveries and new stuff. And it's just going to get compounded by a recession. And then now we're at a supply demand.
I'd simplify it. I'm structurally bullish just because, I don't think the U.S. can do much more than 13 million barrels a day. I mean, I don't like the whole going from 6 to 13 or whatever, or 7 to 13. That's never going to happen again, right? We don't have.
We just don't have takeaway capacity even.
We don't have takeaway capacity.
It's all infrastructure.
I think
investment.
For sure. You guys would know better than I. Tier 1 is kind of drilled up, right? So just the wells aren't going to be as good. It's kind of. I just don't see. And I think OPEC's realized that too, that they may have taken market power back a little bit. But again, to tie this back to super quick to, your comment about data and figuring things out. I mean, that's ultimately what we're trying to do at Wrapify, right? How do you take all this data and how do you kind of crystallize it into summarize it in visual business insight format and do it at scale. And we all try our best to, read the tea leaves and say, what is that chart telling me where it's going? And what's this, model or this table telling me? But none of us know at the end of the day, right? But like, we're trying to make it easier for you to think,
Yeah.
No, I mean, data driven decisions are much, even just by yourself, right? Like if you don't, I like to always have set people I can ask about stuff, but if it's just you, having the data to at least support your hypothesis or prove your hypothesis completely wrong is very useful, right?
Yeah. I mean, and what do we see here in the U.S.? I mean, just specific to that again. I mean, I think we start to see consolidation, right? If we are going to flatline growth, like what's the point of just having a whole bunch of companies, right? Because at the end of the day, you can really only cut out OpEx, really, for the most part, and where can you cut anymore? That's just at the G&A line item, right?
Yeah.
So,
I mean, wasn't a kind of a deal with this recent Callan? Weren't they actually reducing rig count, like after selling the Eagle Ford and taking over the Permian stuff? It's like they're actually reducing the rig count.
Yeah, that's interesting.
And I mean, just hitting back to data sets too. I mean, I just put something out on Intersection that was related to both the gas and the oil numbers. They have the DOI, Department of Interior, has data on who's paying royalties every year, right? So if you were to look at calendar 2022, it was the most number of companies that paid royalties on federal leases in like 14 years, right? And it's up 20% over the last 2 years. And a lot of that's private equity companies and, smaller companies drilling in Delaware and whatnot. But, the data just doesn't match the narrative, right?
Yeah.
That's just reality. So it's, to me, data tells the story.
Absolutely.
Data tells the truth. Data is going to tell you where we're going, So, I mean, again, just think back, and, I hate to even mention any type of politics, but here a year ago, just I think from an anti-Biden perspective, the entire industry thought because of the SPR and because of just bad policy, prices would stay high and go higher. Right. And how many bad decisions were made last year on, capital spending and various other things that ultimately weren't based on data.
Yeah, just a feeling about where it was going to go because of you're not checking their biases.
Right. So I think we can all learn by checking our biases.
Sure. Yeah.
Right.
Do you want to jump in a little speed round?
Yeah.
So I think one that I'll start off the speed round and just you real quick.
We'll just pepper you with questions and just short answers.
Well, I was going to make one up on the fly, but Excel or Google Sheets?
Ooh. Today, Google Sheets.
Yeah.
I'm in that boat.
Yeah.
Unless,
today, Google Sheets.
If I also do feel like though that very much so has to depend on what are you a Windows shop where you've got all your Windows licenses?
I'm an Apple guy too. And so there, it's a little easier.
Oh, don't even get me going on Apple's spreadsheet stuff. It makes me sad.
I've never used Apple spreadsheets.
It's bad.
I'd say 90% of my time these days is in Google Sheets.
Okay.
Which is crazy.
Yeah.
I mean, that's one of the reasons I like it so much, right? Is it's not just a spreadsheet. I can pull in all kinds of stuff or link it to other stuff. And what about outside of Wrapify? What is your favorite kind of cloud software tool that you're kind of using these days?
I mean, recently Trello, right? Just from because we're in the midst of development.
Kanban.
Mm-hmm.
And again, getting back to just kind of the process of what I've had to learn as a guy that's not a software developer. We have Slack too, right? And my process was, let me just spew a bunch of garbage into the Slack channel of these are my great ideas, and then they get lost, right?
Yeah.
So to have a process has been huge for, I think, our, again, we're talking about, like I said, February 1st to today, to have a product that I think is really cool. We're on light speed, right? So to have a really structured process of how that's done, we'd never be here without that.
Yeah. And what's the most interesting bleeding tech or emerging tech coming out that you're most excited about, other than Wrapify, obviously?
I mean, AI, right?
Yeah.
So it's both exciting and scary, I think, quite frankly, right? So, and that should be for all of us. I have a daughter at University of Arkansas. I have a son.
Woo pig.
There you go. I have a son that's, junior, going to be going into college. And, how do you as a parent recommend what field to go into these days? Right.
Even that, but I think it's the balance of like, how should our kids be educated? I mean, like, should they learn how to, they need to learn how to use these tools. I mean, in the same way, at least at one point I had someone teach me how to use Google, right? Because, it's not just typing what you want. You use the right keywords, So, I mean, is there like almost like prompt engineering classes and just letting them use that tech to help learn, like, because you want to use it, but at the same time, I think there's still a lot of value in just learning how to like do things away from a computer and like being able to be creative outside of that too. It's a tough balance.
That's the scariest part. Like our kids, right? Like I could see Bobby and I have kids both under seven. Yeah. Both under 7. And it's like, there's a very real future where they don't have driver's licenses. They don't, and they also rely on a chat, whatever the model, the language model is in the future for like, that's their dictionary. That's our Google basically for them. Right. And so that's like, well, man, I mean, it's like, makes me think of like in school where they're like, oh, well, you got to learn how to do it by hand before you use your calculator. It's like, why? I will always have a calculator at my disposal for the rest of my life.
It's super interesting from a tech perspective, and obviously the topic of this podcast, right? Just because the way that you can create code too, right? Yep. So like everybody can create their own app, and what does that mean for bigger tech companies and whatnot? And again, I'm like, hey, I'm a startup doing stuff that like AI might be able to replace me. But, at the end of the day, I think, if you like, there's gonna be value in curation, right? There's going to be prompt engineers, right? But like, you got to create a better experience at the end of the day, right? Something that's, again, getting back to easy to use.
Humans have to use it. Yeah.
Right. Like,
for now,
because if you create, an app for yourself, that might not work for other people, right? So I still think there's going to be products that are mass products and people that don't want to prompt down and prompt down and prompt down and prompt out, right?
Yeah.
Otherwise, like I said, we all need, guns and cabins.
Soon. Guns,
good to have both.
Pickled food and ammo, right?
I mean, I'm interested, where does AI go in energy, right? I mean, is that in the, does that hit the PE level where it's like, hey, we can just draw type curves, with AI these days? I think that's been done for a while now, quite frankly, right? Is that used at the drilling level? Is that used at the finance level?
Can we use any of those? And, I think we've talked about it. We could talk like for a whole nother podcast about it, but I mean, just there's that element of risk of letting something take the reins on that.
Right.
Just what's the upside and the downside.
Right. And that comes down to technology might be great. And I think this is one of the limiting factors near term, but like, you ain't going to take career risk. You ain't going to take career risk and say, hey, let AI just do that.
Yeah.
Well, especially we've talked about it before, and I'm sure we'll talk about it again, especially in, the energy space where it's not like, oh, the risk is the app doesn't work and, it's Facebook and the users just don't get to check their likes that day. The risk is you have a blowout, people die. There's Macondo, right? Like it's a much different.
But the type curve is way wrong and you invested $300 million more than you should have. Like,
You overpaid, you underspent. No, that's where like, I honestly think, and it's with every new technology, right? You get through this big hype cycle, overpromise, underdeliver, then everybody gets really down on it. And then you come back somewhere between the top and the bottom of that. And that's the actual reality. And it'll slowly progress up and to the right from there.
Adoption.
Right. And I think like that's for a lot of, call it commercial applications, right? Where there's domain knowledge and expertise that goes into something. And there's a bunch of risk, whether it's financial, human, et cetera, into that, where you're still going to have a person there kind of prompting, controlling, guiding for a long time before it gets to a fully automated throw it out in the field and let it run type of scenario, right?
I agree.
Yeah. Last question. Well, I've got 2. What's your favorite board or video game? And then what's your favorite, are you a Bitcoin maxi or are you into any kind of crypto?
Board or video game? It's probably a card game if that works. It's Canasta. My wife and I play Canasta with other couples as well. So, and then no, not into crypto at all. Never, and kind of kick myself in the ass. I'm not that I'm a huge believer on where it goes. We'll see, I guess. But, I can still recall the early Bloomberg stories, and you're talking 09, 10.
Right. Yeah. Yeah.
And reading about it, and, back in those days, to have just thrown a tiny, 1 or 2% of my, money into it would have been, the move, quite frankly.
Yeah.
Right?
You wouldn't have been worried about Wrapify.
And yeah, exactly. And I kind of worry about the energy implications, and maybe I'm wrong on that. I don't fully understand how it helps, energy. I get it, right? If there's stranded assets that need to be used 24/7, but, yeah, I'm not convinced that it's beneficial to the world.
Yeah. There's definitely some things they got to overcome.
Yeah. I'm honestly very curious to see how it handles the impending recession, because it has, at least Bitcoin and Ethereum, the two that I support and follow. I think, since, Bitcoin came out of the recession as a product of, basically backlash towards it and the Occupy Wall Street and all that stuff, but we haven't ever seen a big like economic event while Bitcoin has existed. So it's still, the jury's still out. It's got to prove itself that it will hold value when a recession does actually hit, or it's just going to.
It did lag, right? It's always been pitched as an inflation hedge too, right? Because that started with central banks printing money in 08, 09. And the recent bounce would suggest it's done well with inflation, but it certainly lagged for quite a while.
Yep.
I think it's just a provable fact that there's a whole bunch of scammers involved in it. And you could say that about any industry, right? Like, they need to clean that up before it's going to be taken seriously.
That's one of the things that I always tell people. It's like, it's just a bunch of scammers. And it's like, well, a lot of those guys are just ex-Wall Street guys that were doing the same thing on Wall Street and are now just doing it in an unregulated fashion, even worse. But it's, and then of course you can't get the SEC to even make a ruling on what they are, which is a whole other can. But anyway, off that rabbit hole, how do people find you?
So find me personally on Twitter at Energy Credit One. Reach out on LinkedIn if you want. We do have the Intersection IO. So if you want to continue to see kind of putting out, 2 times a week insights there. And then Wrapify.tech is the website that will be, on Google Workspace, knock on wood, hopefully in a week or by the time this goes out.
And that there is a free, or like a trial version.
Yeah, it'll be free for a month. We're really not looking to monetize it till we get feedback and iterate, quite frankly. So early adopters will be kind of, the people that we build around. And, just to hit on that real quick too, I've had a lot of people reach out, and that is, folks in corporate finance, folks in investor relations, FP&A, kind of across the board. Had a really big consulting firm, said they do a 50-person pilot, 500-person pilot. And I asked them how many people do slide decks there, and they said 80,000. Right?
Okay. That'll work.
So, yeah.
Oh, that's awesome.
Awesome. Well, best of luck.
Yeah. Appreciate you coming, man.
Appreciate the time. Yeah.
Everybody go sign up and test out the free trial. I'm going to myself. So
cool.
Appreciate it.
Awesome.
Thanks, guys.